it's your realtor Lindsay here with Simply Sold Homes, and today we are going to talk about a very important part of the home buying process. If you are in the process of obtaining a new home loan, or you're thinking you might buy a house in the next 90 days, there are some rules you must follow. I get it, no one likes rules. You're an adult and you don't want to be told what to do, but there are several mistakes that you can make that could potentially leave you unfinanceable. If you want that dream house to be yours and not just a dream, you gotta play by these rules. So, before you start the loan process, here are some no-nos to avoid. Number one, don't over deduct on your taxes if you're self-employed. Yes, so if you're self-employed, you have to start planning the year prior. What you could save in taxes can also make it impossible for you to purchase the home you want. While if you're thinking about buying a house, don't take out any cash advances on credit cards. Don't miss any payments, bounce any checks, or withhold any payments to accounts to be paid off. Here's an important one. Don't co-sign other loans for anyone. When you co-sign, you're obligated to repay that loan. And with that obligation comes higher debt to income ratios as well. Even if you promise your lender and the underwriter that you won't be the one making the payments, your lender has to count the payments against you. Another big one, when you're talking with your loan officer, don't overstate your income or try to hide any blemishes on your credit. You need to be honest with your loan officer because they will come up during the process. Number 5, don't wait until you find a house to get pre-approved. Don't wait until you find a house to get pre-approved. Number 1, there might be something that you need to fix on your credit that you can do in the next month, or maybe you don't quite qualify or want to spend as much as you thought you did. So we need that pre-approval. Number 6, don't deposit large amounts of cash into your bank account without speaking to your bank or lender. Your lender needs to verify your source of money, and cash is not traceable. Before you deposit any amount of cash into your accounts, discuss the proper way to document your transaction with your loan officer. If you can't document where it came from, like an actual check from a family member, or a check from payroll, you need to keep that cash in your mattress. That large deposit rule applies to before and during escrow. So let's take a minute to discuss some things that are not acceptable while you're under contract. Number 1, don't make any large purchases like a new car or furniture for your new home. I know you're excited, but that couch has gotta wait. With new debt comes new monthly obligations, and new obligations create new qualifications. People with new debt have higher debt to income ratios, and those ratios make it riskier for your loan. And sometimes you could no longer qualify to buy that house. Number 2, don't change bank accounts. Remember, lenders need to source and track your assets. This task is a lot easier if you're consistent among what accounts you're using. But if you transfer any money, you need to speak with your loan officer ahead of time. Number 3, don't apply for new credit. Personal loans, cars, anything I didn't mention that you're thinking about opening, don't do it. It doesn't matter if you intend to utilize the credit or not. So even if you just applied for a credit card but you don't plan on using it, don't do it. When you have your credit report run by organizations, your FICO score can be impacted, which will lower your score, which could make your interest rate higher and maybe even make you no longer eligible for financing. During the loan process, it must wait if you want to buy the house. Don't close any credit accounts either. Many buyers believe that having less available credit will make them less risky and more likely to be approved, but you're wrong. A major component of your score is your length and depth of your credit history, as opposed to just your payment history, and also your total usage of credit as a percentage to your available credit. Closing accounts has a negative impact on both of these determinants of your credit score. And last but not least, you gotta love the house more than you hate your boss. Do not quit your job or change employment while you're under escrow to buy a house.